There is no real market anymore. It's a fraud. It's a sham. Permanent QE from central banks all around the world. Stock buybacks financed by debt, bought by investors. Insider selling. A dramatic downtrend in so many indicators. This is all pointing to one very simple conclusion. Some people are preparing for the worst, while another group is trying to scavenge off from this dying underlying economy. You came here for the truth? So let me unveil that for you. Today we're going to look at several factors. I'm going to show you what's happening in the markets. We are going to look at insider selling. I have some updated information as well as what's going on with the repos I posted on the blog or community section of my channel earlier today. I know a lot of people were commenting on that. Let's take a look at this right now. You can see directly from the New York Fed's own website. Just wanted to give you some insight as to what is happening. You can look at this here. See that once again, it was far beyond the expectations. $80 billion was submitted. 75, of course, being the maximum. This is not going to stop. They said that, oh, it's because of the season. It's because of what's happening with this or that. Temporary, have no fear. Couple days, it'll be all over. We've gone past that point now. If it continues to persist, clearly there is an issue underlying all of this. Fed adds $105 billion in cash to the U.S. banking system. The New York Federal Reserve awarded $30 billion to primary dealers at a 14-day term repurchase agreement, the repos, and $75 billion in an overnight repo operation. When you add the two together, you get your 105. This is far beyond anything that was supposed to happen. Clearly, just a few days after they began this, they are already escalating to new heights. This is truly not a good sign, and if you're willing, you can ignore it and just put your head in the sand and hope that they will take care of it for you, but that's not a good idea. Take a look at what happened with stocks today, and you can see that the major indexes had fallen quite a bit. Looking at the Dow Jones down 142 points. This day was very unusual. In fact, we saw it going down quite a bit from the beginning. Started the day up, started falling, and then we had another surge here at around 2 p.m. and it continued down after that due to some political events that were occurring. I just wanted to show you the fact that we are seeing volatility of all kinds, but if you look at the VIX index at 17, it's never going to tell you that. I wanted to focus just for a moment on Netflix. Now, this is part of the whole FANG stocks. They're talking about how fantastic this is, that you should buy into this type of stock. You've heard about how despite this company losing money, hey, don't worry about it because they are signing these massive deals. They're getting a lot of new subscribers, and so we should ignore everything that is actually underlying this. But just like what's going on in the financial market directly with the repos, with the central banks, this is the same situation. Companies cannot burn through money the way that so many of them do and receive these high valuations without meeting a trigger point at some time. So whether that's already peaked out, whether or not we will have some event in the near future that creates a big problem, all I know is that this type of company here cannot sustain what it does for an indefinite period. Eventually, something has to happen. Maybe they will get bought out. Maybe they will start to buy other companies. They'll raise some excessive amount of debt. Maybe they'll have to shed some of their workforce. Maybe their services will change. Maybe their prices will increase. All I know is that if you look at this in the last year, so this is the last day, but if you take it over the last year, it has fallen quite a bit. Now, obviously, if we go back to the 5-year, you can see that this has moved up dramatically. Those invested in this during the bull market from 2009 to present clearly have seen their asset appreciate. However, looking at this on the 52-week basis, it was at 386.8, and yet you see it today at 254. That just shows you right now that yes, even the big company can fall. It is nowhere near its high at this point, and the market seems to be late cycle. So what's going to happen with this company? I am interested to see it because this is one of those massive corporations that some say do not deserve the valuation that they've been given. Now, we've got some interesting news to cover here. This is something that I touch on a regular basis. If you've been on the channel for a while, you know about it. Over the last 12 months, investors have pulled a record level $1.1 trillion out of equities. Let me just make sure everyone realizes that, out of equities, and put that money into bonds and money market funds. Now, if you go into the comments section, I want you to look for the person who divides the total stock market capitalization by the amount of money that was pulled out, gives you that percentage, and suggests that this is nothing to worry about. It's always good for a laugh. In this article here, out of Business Insider, they are saying that this is an opportunity for you to buy in. They want you to buy the dip. Well, of course, I'm sure their advertisers really do want that. Corporate buybacks and mergers and acquisitions have supported stock market growth even as investors have fled equities. Understand what's happening here. These are the biggest buyers, okay? The corporate buybacks have been so important to the success of all of these stocks. Imagine this. You have central banks printing money, devaluing the currency every day. You have the debt and the deficits rising dramatically. These companies issue this debt. Investors are buying it up left, right, and center. Then they decide to buy back their own shares using that money. It pushes the stocks up, and then insiders sell every single time. In the last year, investors have pulled a record $1.1 trillion out of equities, moved the money into bonds, money market funds. That marks the largest such shift in history. Now, we have to understand, when we see this type of event occurring, it is extremely important. It's a record level. This isn't something that we should necessarily ignore. No, we have to realize how important it really is for your investments, for the 401ks out there, for the pension funds. On the left-hand side, global equity flows. Trying to compare that with the bond and money markets, it's very clear that money is fleeing equities. There's no doubt about it. And of course, where does the data come from? The EPFR, who we've talked about over and over again. Corporates buy a lot more equities than traditional investors. Annual buying of global equities by source, mutual funds buybacks and mergers and acquisitions. 2018 was a record year, and perhaps 2019 will be somewhat close to that, but we're talking about $1.1 trillion when I saw the numbers last time for 2018. That is extremely excessive in a time when 93% of all assets were in negative for the year. It's unbelievable to see how much of an impact stock buybacks have on these markets. I would also like to point out, if you look at 2009, this is something that people do not understand. Well, they think that as long as the stock buybacks will be there, then you don't have anything to worry about. But understand this, 2009, the stock buybacks were essentially non-existent because they were unsure about what's happening. And this right now tells you that stock buybacks don't necessarily take place at $1 trillion a year for the foreseeable future. Sometimes they decide that this isn't the right thing to do, and so we should invest somewhere else. Maybe we hold cash. They have their own agenda. I'm just showing you the data historically. Microsoft hits record high after announcing a $40 billion stock buyback plan and dividend boost. This was actually from a few days ago. I think that the dividend boost is a great thing to grab investors. You keep long-term investors as opposed to people trading in and out of the stock. You can give that dividend. The stock buyback, on the other hand, is a different story. This, of course, makes this stock surge as a result. It can actually pull the entire market because it's such a huge stock. But what happens every single time? People sell their shares. Insiders will sell when there is a stock buyback that occurs every single time and time again it occurs. And of course, it's at a record level right now. Insider selling on pace for a 2-decade high. This is unbelievable to see the level at which this is occurring, and yet most people, they have no idea what's actually making it go higher. They think it's fundamentally strong. It's not the case. Corporate clients buybacks, just showing you the 4-week average. Clearly we see that this has gone haywire right now. WeWork bankers have discussed laying off 1/3 of the workforce. This company, WeWork, is an interesting story. We've been seeing it a lot in the news. I don't believe I've mentioned it at all. I'm sure you've seen it. Essentially, we have a company that is supposedly worth billions and billions of dollars. Then they opened up their books and people didn't like what was there. As a result, the valuation came into question. They saw Uber, they saw Lyft, then on the opposite end of the spectrum, they saw Beyond Meat, and they don't know what's going on. Well, of course, underlying that, you see this situation. Oh well, maybe we're gonna lay off 1/3 of the employees. Maybe they want to cut costs as a result. Let's see what happens from this. Okay, I don't want to speculate on the situation, just wanted to give you an update because that piece of information didn't really make it to the mainstream as much as I would have hoped, but what else is new? China's Tesla NIO slashes thousands of jobs as losses mount. The car industry is taking an absolute beating. This goes for everywhere. I've mentioned it so many times before, but we're seeing it in China. We are seeing this in India. Look at what's happening all throughout Europe, the US, Canada, and so many other countries. China passenger vehicle sales year over year, you can see that has been contracting. It has turned up in the short term, so we'll see where it goes, but it does not look good at all. A majority of the ultra wealthy expect a recession next year and are hunkering down. Take a look at this. UBS surveyed 360 global family offices with an average family wealth of $1.2 billion. The results showed 55% of family offices see a recession by 2020. So that means that these very wealthy family offices are shifting money to what they believe is safe. Whether or not it's safe, that's a whole different story. I just want to show you this because it tells you what these type of individuals are not only thinking, but are doing. So I'm going to end the video there. If you found it informative, hit that thumbs up button. When you do, it supports this channel. It's just one click and you are helping me out. Thank you very much. If you want to make money, if you want to build a business, this is what you need. The Amazon GPS is what you need, all right? So this is a step-by-step, it's a free e-course teaching you how to sell on Amazon. I made it completely free because people had been asking me for solutions on what do I do. There's an asset class that is business that most people ignore. Definitely check it out at theamazongps.com. If you want to learn about the foundation, the history, the asset classes, how to make money, how to reduce your debt, these two books have everything you need. You can check that out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Hang on, don't go anywhere. This video has some important data which connects in with this video, so definitely check it out. Click on it and I will see you there.